Okay, can you guys hear me? I hope so. Sorry, my mic has been a little bit funky, so I had to adjust it. I had to actually swap it out. Uh, Not sure what the deal is. Just give me one more minute. Okay, good. You can hear me. Thank you, Paul. All right. Just give me one more minute. We'll be on our way here shortly. All right, so let's get started. For those who join later, they can always go back and restart the video playback. All right, so what's going on now, right? So the market has paused a little bit. There's a lot of wave three, and when I talk about waves, what I mean is, this, right? This is wave three. There's a lot of wave three all over the charts. There's a lot of pausing. There's a lot of breakdowns. So let's just kind of go through them really quickly. Equal weighted S&P has been pausing. You can kind of make a small little argument. This is a head and shoulders right in here. It's very small. Okay, so that looks like it wants to start to retrace a little bit. Dividend weighted S&Ps towards the bottom end of the rising F flag and building a little bit of pressure. That's usually bearish. So look for this one to either have one more up because they tend to do that when they're at support. They'll kind of fool you with one more up and then they'll start to correct. Okay, but this one also is in a wave three from the bottom here, right? One, two, three. So that's also a three. The VIX is starting to rise, um, and we talked about it back here. That once it starts to come into this area, start looking for more upside again. Okay, and popped out today, pulled back, but keep an eye on it. Remember, when you have a lot of good news, a lot of high expectations you set up for the market, whether it be the vaccine, stimulus, lending facilities, QEs, other nations, other continents are QEing and packages and all these things. Uh, you are setting yourself up for at least a correction. Because if any single one thing goes wrong, then fear comes into the market. All the bull, perma bulls, America is back, la 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 bullshit, right? Goes out the window and everybody starts to sell. And then you start getting sharp reversals. And then the newbies get all confused because they're like, I don't understand. The vaccine is out. We're going back to normal. And they'll get fucked, right? And I know that because I used to be the newbie and I used to do the same shit and I couldn't understand it. But believe me, this is classic. Buy the rumor, sell the news. And it's not necessarily the news, it's just the expectations are so high that anything that goes wrong, somebody dies, somebody gets, some kind of seizure or some shit, then everything goes to shit. All right. We'll talk a little bit more later what needs to be done in order to get the economy back. And it's not it's not just about printing. There's a lot more to it. So anyway, we'll talk about that afterwards. So New York Stock Exchange double topping here, right? Also a little head and shoulders right in there. All right. Dow Jones um, coming up to the support area, broke down a little bit. It's a rising wedge. Usually with rising wedges, they point one way and then do the other. All right. So that doesn't look very bullish. S&P has corrected further to the bottom of the trend line is where I expect it to come. Perhaps one more down, and then let's see how it behaves then. Clearly, you have a 1, 2, 3 up, right? And then it starts to come down. And if the structure is pointing up, then the next move is down. Okay. Now, if you go out on a weekly chart, depending on how you want to draw this, okay. Other people like to draw it like this. Okay. So it's up against resistance, broke out a little bit, you know, that's fine. But either way, it's in the bottom portion of the long-term trend. Okay, and there it is on the Dow. Okay, this is a very, very, very long-term resistance area for the Dow, and it's towards the upper part, right? Limited upside. Let's say that it can rise another 7%, okay, and then you're hitting that resistance area. Not too much upside. It needs to correct at some point. NASDAQ, it's already broken out a long time ago. And that's, it's not following through as of yet. Let's take a look at it on a smaller time frame. All right, there's a lot of noise in here. I'll try to clean it up for you. Okay. Point of control, meaning if this fails, and I expect it to, when this fails, it should come down to about 11,423. That's the point of control from the previous high. And 11,423 is called the point of control where the market is at equilibrium. All right, the best price to do business. And then again, it's a double top. Right, you have one top here. That's going to be the second top. It didn't have enough strength to make it all the way to the top of this channel, the blue one, right? It didn't have enough strength. Okay, and then it started to fall apart. Came to the bottom, building pressure. Next move down. 1, 2, 3 down. Down here is where the 63-day moving average is, which is basically where the quarter trading is, and it takes about a quarter to put on and off a position. Anything above that is considered to be bullish. Anything below it is bearish. Okay, so simple enough for that. So the moves have been huge, right? 14% down, 14% up, and then this one was 16, and then this one from the bottom has been 18%. Huge moves back and forth, and that's why I say no matter which way you go, long or short, you're going to end up being wrong. And that's what happens at bear markets. That's what happens at tops. It gets very volatile. So just remember that. Right. Small caps have been doing really good as of late, but they are coming up against this wedge where it's ending. Right? It's got to make a decision one way or another. It's pointing up, so usually you get the down move. Okay. It broke out incredibly bullish here. Right? We can kind of say it's also building a high base. So, setting up for perhaps a another move higher. That's how the bulls would see it. I would look at the bigger structure and say, possible, but look at the bigger structure, right? Needs to correct. And not only the small little portion here needs to correct, not only this has to correct, but this whole thing needs to correct as well. Transportations, double top, little M pattern right in here, right? Lower low. So look for this one to correct as well. Google, which is the FANGs, uh, the market leaders, starting to break down. And it's got to make a decision here shortly whether, to bounce one more time or start to correct. Okay. So you can see the message of the market, right? And that's why we do these exercises, is that it wants to correct. It's ready. All the signs are there. The first area of support for the FANGs, the market leaders, will be somewhere around 5,400. And then if that goes, then look for deeper pullback down to 4,521. Okay. You got a little head and shoulders going. Okay, see it? Nice little head and shoulders. So it's ready. It's ready to start to correct. Europe broke out of this long-term trend line, but it is in a wave 3. Okay, 1, 2, 3. Look for a little bit of a pullback here. But again, as long as it remains above this trend line, if I could draw, okay, it's still bullish. Okay, and how much of a move would that be down to the trend line? If it did it fairly sharp, it's about a 10% move. And that's okay. There's nothing wrong with a 10% correction, especially after all this nice move to the upside. So I don't want to upset the bears. I mean the bulls, sorry. UK stalled. Okay. This is gray because I said, okay, tentatively I think this is where it could top out, but it hasn't hooked enough. It still hasn't hooked enough, so I'll leave it gray. But it's going to look something like this when it's said and done. All right. So you have the one. Right. This is a wave 2. Look for a wave 3 down to correct. Okay, and then that sets up a 1, 2, 3 up, and then correction again. All right. Denmark, nice rising wedge, doing good. World stock market index starting to get a little bit tired here, right? So you got this little roof looking thing. So again, look for a correction here. Jets were on a nice little rip there for a while, and now, you can make an argument that it may be setting up for a bull flag. Perhaps something like this. Okay. Correcting through time, perhaps a high base. I still think it's done. It needs to correct. Okay, so you had the big move up, then you have a 2, then you have a 3. I think this can correct at least to the bottom here. Then we can validate the upper portion. Then it looks like a corrective move to the downside. So sure, it can come down, bounce, hold a little bit, and then correct. Okay. Right, this is my little indicator, which is the beaten up stocks. Okay, and I clumped them together, made a little baby indicator, and as you can see, this has uh, broken down, so that needs to correct. Okay, but again, it is in a 1, 2, 3 up, and that's the story, right? How many indices have we looked at? How many combinations have we looked at? Like this one, Avis Car Rental, Royal Caribbean, Delta Airlines, and so forth, and they're showing you the same thing. Wave 3 up with setups to correct. Today, China started to fall out of the structure. We've been talking about this, that it needed to correct. It is finally correcting today. It did cross the bottom trend line, but we'll see next week if that's valid, if that's going to hold. Okay, so then you're going to start getting a correction here. And in a sense, even though the Nasdaq has been leading on the way up, China has also been a leader as of late. Okay, because they're at all-time highs, and they've been there for quite a while. Okay, so this is going to set up now something like this, right? So you have a 1, you have a 2, and this is probably going to become the 3, and then we look a correction. We look for a correction to the downside. How much are we looking for? Just to test the support from here, it's about 22%. All right. Now we'll talk a little bit more about this later, because you're saying 22, but China's doing well. It's doing this. It's doing that. Yes, but I'll explain a little bit more later. The fangs of China, they've been stuck here a couple days now, and I said, okay, look for one more up. Okay, because it was coming down, broke out, little consolidation. Usually get one more up, then you end up with an M pattern, and then it starts to correct, right? So it doesn't look like it wants to make a decision this week, but we're going to keep an eye on it for next week and see how, what it wants to do. India has really been kicking ass. I mean, this thing just fucking took off. Very unexpected, to be honest, but it's doing good. It's doing good, but again, it's very vertical. Um, you know, we'll see. We'll see how that lasts and for how long. Okay, so that's the new structure there. Japan, all right, going sideways. You can kind of make an argument it's a high base, right? Just building pressure for one more move up. We'll see if that does pan out. Taiwan continues to push higher. Kospi, which is Korea, continues to push higher, but getting a little bit tired. All right. Saudi is breaking down. Australia is breaking down. New Zealand barely holding on. Not New Zealand. Shit. Brazil. Sorry. I was talking about Australia and I'm thinking, all right. So again, this is a wave 3 up, right? 1, 2, 3. At some point, this is going to hook. Once it hooks, this becomes valid. Structure is pointing up, and then you look for the next move down. Emerging markets trying to break out, not doing a very good job. Obviously, 1, 2, 3 up. Okay, so again, it's the message of the market, the entire market. It's up against resistance. It's on the wave 3 up, building that high base. Right? You see it everywhere. It's not something that I think or, well, let me present it to you this way. No, it's completely objective. It's independent of what the fuck I think. And that's where you want to be. You want to let the data tell you what's going on instead of you telling the data what's going on, because that's when you get destroyed. That's when you blow out accounts. Have a little coffee. All right. So, emerging markets near the top, and here goes Germany. Bye bye. Boom. Correction. See it? It's textbook. So this is the first one to go. Germany is the first to go. Right? So you get a nice thrust up move. You go into a nice F flag. Normally you would say, okay, this is a 1, 2, 3 for the way up. The problem is that you test at the head again. Didn't sound right, but you know what I'm saying, right? Here's the head and shoulders, testing the head again, starting to break down. Unlike crossing the line just a little bit, this one has solidly broken the line. So remember, when you start getting head and shoulders all over the chart, like we have it here, this needs to come down a little bit more. And I will explain this a little bit more later. Uh, The BRICS, which is Brazil, Russia, India, China, right? They're still holding on to the support area. Nothing there. Skip this. Real estate is not going to be doing very good. And remember, the VNQ has a lot of retail, commercial real estate in it. Um, it's got like American Towers and some other things. So this was supposed to take off, right? Because you get this move. This is a 2, and then it's supposed to go up and then correct, right? And then you end up with a 1, 2, 3. It's not what it's doing. It's not what it's doing at all. In fact, we had the classic wedge pattern where it breaks out, doesn't continue, and then just fails. So now we have to start thinking about what it's telling us, which is more or less a double top. And perhaps we should mark it now. Okay, so this is a double top right in here. And that's not good for the real estate stocks. Financials breaking down. The more pure banking ETF still hasn't broken down. It's in a rising F flag. Oil. Let's talk about oil. All right. So we had a very large build, and 15 million barrels or whatever it was. Now what? Well, we expanded the structure. Okay. Usually when oil goes up, there's demand, or the dollar's falling, or both. Okay. Same thing on the way down. So now we're going to recount this. It's going to be a 1, a 2. So now we're going for a 3. So I think there's further downside in oil. Gold broke down from the uptrend, holding. With the dollar being so weak, you got to think this is going to start going back up at some point. It's being weird right now. So let it go. Silver, I don't talk about this much, but again, it is a 1, 2, 3 down. It's going sideways to down, so I expect this one to start going up at some point. But again, it's being kind of weird, right? Perhaps it needs to come back a little bit more, and then it bounces. Right. Commodities overall have broken out. Now, we can say this is a 1, 2, 3 just because it barely crossed the previous high, which makes it a 3 of 3. And we might start seeing a correction in commodities, which is indicating to me that you may have a sell everything event. And I think that might scare a lot of people. It may be just a correction. But when you're in wave 3, and then even commodities, which have been bullish because of the dollar falling, and I heard, I think it was Norman, I think he's like, oh, no, it's just because of disruption. That's why the commodities went up. It's because of disruption. It's like, yeah, dude, 9 months into it? No. So commodities went up, and that pushed the dollar down? No, it's the other way around. It's the dollar going down that pushes commodity prices higher. Anyway, he's a clown. But again, when you're in wave 3, and then this is a wave 3, okay, you need a correction. And if commodities start to correct, then you're selling everything. All right. Precious metals came down, popped up. Let me fix this a little bit. I hate when the lines move. Right, so we were expecting more upside in metals. It's not going to come yet. Perhaps this is going to be a big 1, 2, 3 up. Okay, we'll see. Base metals pulling back a little bit. Let me go out to a daily. But this needs to correct as well. So this is what I'm saying, all commodities need to correct. This is a very, very huge move to the upside. needs to start coming down at some point. Palladium, same thing, getting to break down. Copper, kind of topping tail here, right? That needs to correct. Agriculture, break test go. This has been the laggard, all right? Sugarcane, ready to correct as well. Corn, ready to correct as well. Wheat was the first one to start to correct. And remember, last video I made, or maybe a couple of videos ago, I said look for this one to start to bounce, right? And it did so. Finally. Okay, so it corrected. So now what we looking here, right? It's just a very big sideways kind of move before it starts breaking out to the upside. Okay, see it? Very big sideways. You can even make an argument it's perhaps a funky looking W, right? Now, if we have a very big sell-off event, then this is going to break. All right, so just keep that in mind. Soybeans, same thing. Broke out, but very tired. Bitcoin, I told you, this is going to correct. It needs to correct. Okay, so 3 days now, it's been at the bottom of the trend line, going sideways. I would make an argument that it needs a little bit more downside, perhaps to the previous low, then maybe some upside, correction through time, and then up it goes. Again, if we have a sell-all event and it's much deeper, then you would get something like that. There's some evidence to suggest you're going to have a deeper event. All right, so far. Litecoin, stay away from these things. Ethereum, stay away. Ripple, stay away. Dollar, okay. Broke down. Okay. So it had a wedge, broke down, back into structure. It's confused as to what it wants to do right now. And again, remember, if we have a sell-off event or a correction or something, that's going to scare the market, then guess what? Money's going to come out of stocks into the dollar. Okay, so that's going to push the dollar up. But we're not there yet. We're not there yet. So we got the VIX rising slowly. We got the dollar for now kind of, pausing on the way down. You got a lot of wave 3 up. You have a lot of little structures failing. You have many head and shoulders all over the place, right? So we're tired. We're tired for now. And that's the message of the market. It's not what Nick Hyonis thinks, right? Special drawing rights of the IMF are still continuing to push higher, but I hate when these lines move. Very, very frustrating. Very frustrating. Okay, so he broke out. Long-term bullish now for special drawing rights against the dollar. But again, it is in a wave 3. Okay. So long as price remains above this trend line, it's bullish. Now, you can, trade special drawing rights, but you want to be aware of them because they're the world reserve currency for the IMF. Right? It's a basket of currencies, the pound, euro, uh, I think, not India. China is in there. Yeah, so that's what a special drawing rights is. US dollar Japan continues to grind lower. The euro, okay, high basing here, correcting through time. I can make an argument it's a bull flag, okay, for one more, which is the opposite of the dollar. The pound pulling back. We gotta wait for the correction here, okay, but ultimately we believe that this is going to break out. All right. Euro pound, there's nothing there. US dollar, Turkish lira. US dollar is starting to strengthen a little bit against the Turkish lira, coming back down again. Uh, Needs some time. By the way, these arrows here on October 3rd, 2019, they lower interest rates, and Warren Mosley was so happy. Oh my God, they're finally following MMT. This is wonderful. You know, it's the high interest rates that are causing the monetary inflation. Ha ha ha, stupid Turks. They're so dumb, right? And look now. Look how much value it lost since it lowered interest rates. And guess what? Quickly they came back and started raising interest rates again to defend the currency, but it lost 50% of its value. You see, this is MMT in real life. It doesn't work. It doesn't work. And you hear Mike Norman say it all the time. Well, you know, it's the higher interest rates that are causing the dollar to go down. Remember that, right? The mother of all shorts, because the Fed was raising the interest rates, and that creates monetary inflation, and we should go out and short the dollar. And he got fucking creamed, right? When is the dollar falling? When? And I kept saying this. And this was, 2, 3 years ago. When is the dollar falling? It's falling now. Why is it falling now? Because the economy is not good. Because we're not producing. That's why the dollar is falling, right? It has nothing to do with interest rates are at zero, right? According to him, well, it should be strengthening. No. Again, we're going to talk about this here in a minute. Uh, Slightly, longer view of what's going on. U.S. dollar ruble continues to weaken. Right? We had a nice little bear flag. Same thing with the USD CAD. Broke down, popped back into structure for now. Stabilizing. Australian dollar really kicking ass. And I've said this before. You want to hold this for the long term. You come back, a year from now or so. This thing is going to scream higher. New Zealand doing really good. Dollar against Mexican peso continues to fail. Perhaps it's going to come down to the previous trend line and test it. US dollar won. EU won. Uh, you know, um, Rising little wedge, which failed. Okay. Again, if the structure is pointing up, right, the likelihood is the next move is going to be down. And that's how the market fools people. Right? That's why I got to learn how to read bare knuckle charting. So how much lower can we go? Well, the dollar could devalue another 2%, 2.5%. And here is the Euro currency index. All right. Broken out, but no follow through. All right. 10 years starting to fall. So that's another small indication that there's fear in the market, right? Because when there's fear, you buy bonds, you sell stocks. So when you start to see this cup and handle start to fail, well, that doesn't bode well for stocks. The tens and the twos, they're doing good. So that means the banks are going to make more money. They'll take riskier loans. But the problem is, lending standards right now are a little bit tight. Rightfully so. Aggregate bonds, structure above a structure, starting to break out. So look for this one to start pushing higher as we start getting that correction or possibly that sell-all event. You're going to see bond prices start to rise, interest rates fall. Junk bonds, they're getting tired. Right, so look for this one to start to break down. Currency strategy fund continues to push a little bit higher, but starting to pause as well. All right, and that's in a wave 3 up. Okay, so start to see the correction, which means dollar bullish. And if it's dollar bullish, that means the market is probably going to sell off. And again, that's the message of the market, not what Nick Hyonis thinks. Biotech is breaking out, so that's kind of good, right? For a trade. Water needs to correct, I think. Along with all the other commodities, look for this one to start to get tired. Okay, that will be a good buying opportunity, by the way. Hotels, so many drawings in there, I can't even see it. All right, high basing here, perhaps a little bit more upside. Uh, I don't know. It looks funky, to be honest. Hotels are still outperforming airlines, right? We had a nice little bull flag set up here, and I said in the previous video, you can go long hotels, short airlines, and you'll get a nice little spread there, and that's working out nice. Royal Caribbean starting to break down, right? So that's not good for the overall market. That risk on trade is starting to fail. Norwegian double topping, okay, double topping. Carnival double topping. It's getting tired. Look for that one to start to break down. Apple broke down from the structure, and we have that. Let me see if I have it up. Yeah, there it is. Okay. So again, leading indicator. Apple starting to pull back. All right, so you got this kind of pulling back. Look for that correction. And while Apple has been not rising, Nasdaq has. So now what? Well, look for that correction again. All right. Oops. All right, let's go down the list. Amazon breaking down. Microsoft breaking down. Facebook at support. Netflix bear flag, right? So you got to say to yourself, this is going to break down sooner or later. Google definitely pulled back, ferociously. It did complete that structure where we had that, 1, 2, 3, and then out, broke the previous high, now starting to fail. So that, you look at the market internals on that one, and this is a pretty strong stock. And again, you end up with a situation where it needs to correct. There's going to be some kind of a correction at the very least, if not a sell-all event, right? So this is going to be our new structure now. Okay, it's 1, 2, 3. Let's get rid of this. So that megaphone structure that looked funky now is uh, starting to look a lot better as to what we're looking at. Remember, when you can't charge something out, that means something is funky. Something is wrong. It's doing something that you can't tell what it is yet. Okay, so that's the structure now. All right. Nvidia broke. See that little bear flag right in there? What does that tell you? More downside. More downside. So yeah, it's coming. Tesla broke down from the nice push higher and not looking good. Okay, not looking good. Look for further downside in Tesla. If the rest of the market is going to go, Tesla is definitely going to go. This thing is garbage. Delta starting to break down through time. American Airlines, pausing. Southwest pausing. Alaska is, breaking down as well. JetBlue is starting to break down through time. Spirit double topping. Allegiant starting to break down. Hawaiian Airlines starting to break down. SkyWest, and we identified this a week ago, so no surprise there. Ryanair starting to pull back. EasyJet definitely broke the uptrend. So that's what I'm saying. That risk on trade is done. You can forget about it. Copa Airlines, that's going to start to reverse. China Eastern Airlines try to break out. Now it's ending up looking like a rising F flag. That's going to correct as well within the context of a bear flag. Okay, so 1, 2, 3. Okay, structure pointing up, next move down. Uh, you know, again, when you see the chart patterns and what the message of the market is, and you go into China Eastern Airlines and it's telling you the same fucking thing, you better pay attention. You got to listen to the message of the market. It doesn't look good right now. And again, I'm going to say it, a lot of high expectations. Buy the dip, buy the dip. Everybody thinks, oh, I buy the dip. Oh, vaccine is here. Oh, we're going back to normal. You're not even fucking close to normal. You're not even close to normal. It's going to be a while. Turkish Airlines, okay. Occidental Petroleum has really kicked ass, 155, but at some point it's going to start to correct. Perhaps a little bit more to the upside, okay, but start looking for it to start to come down. Uh, just a couple of stocks that we're just looking at here. Like AMT, right? American Tower. This is part of real estate. Okay. Ahmed is part of real estate. Okay. It's doing really good because it's a hospice, but they also own a lot of real estate. And that's, even though it's a hospice um, business model, again, it's the real estate that you care about them, right? Looking at Boeing, Boeing is double topping. Alibaba is starting to pull back. Avis, Caterpillar double topping, and we're just going a little bit more in the internals, right? CMG for right now, which is Chipotle Grill, maybe a little bit more upside. But remember, Chipotle Grill, these kind of McDonald's, Domino's, they're recession proof, right? They're lockdown proof, so they tend to buck the trend a little bit. DDD try to break out. It's not doing a good job right now. Okay, when you see the rest of the market is about to pull back, don't expect that one to do much. This is what I'm saying. Look at Domino's, right? It's kind of going sideways. Diana Shipping, right? This is dry cargo. It's done very well. Starting to get a little bit tired. Okay, I get a little tired. Uh, Uber, this fucking thing looks like it wants to start to go back down, even though this is supposed to be, the darling. And look at all the IPOs, right? DoorDash and I forgot what the other one was. There's all these IPOs with no earnings. It's the same thing like the 2000 .com bubble. It's just everybody and their mom is coming out, and every single stock is going up fucking 100% in the first day, 80%. Um, Airbnb, yeah, that's it. That's the one that came out yesterday. It was up 87%. Like, are you fucking kidding me? And this is the IPOs, by the way. I made a little index, but I made sure that the IPOs had some time. Okay, 112% first day. Yeah, I mean, give me a fucking break. Are you kidding? Are you kidding? If that's not a bubble, if people, telling you buy stocks is not a bubble, if every time you go on social media, hi, you want to learn how to trade stock? Well, I have a method that's going to make you a lot of money, blah, blah, blah. If that's not telling you that's a bubble, I don't know what the fuck else you need. Big neon sign? I, oh, it's all the classic fucking signs. And I think, and I'll keep saying it, as Jim Chano said, when there's demand, believe me, the market will give you all the supply you want, and that's going to ultimately fuck you, right? It's going to fuck you because it's going to give you so much supply that's what happened to Bitcoin. Why did Bitcoin collapse? Well, everybody and their mom came out with Bitcoin. There was a hyperinflation of alternative um, coins. And then, the know nothings that were experts in Bitcoin, oh, I'm going to take some profits out of Bitcoin and then I'm going to diversify. Yeah, but you can't diversify in the same industry, in the same, sector. You can't do that. That's stupid. Because when Bitcoin goes, everything else is going to go. Well, no, I'm diversifying. Well, they all diversified and they got fucking crushed, right? And that's what killed it. That the hyperinflation of supply of coins killed it, and the stupid, well, I'm going to diversify it. And the other one was that you could subdivide Bitcoin now. See, it's one thing when you can keep bidding it up because you can only buy one coin as a minimum, right? Then you're forced to keep bidding it up. But if you subdivide and you're like, well, I have $35, I want to get a portion of Bitcoin so I can say I own it. Well, now you can do it, right? So you subdivide it to infinity, and that also killed it off, right? And then eventually it got to a bottom, and now, back up it goes. So it's the same thing in stocks. If you're going to keep IPOing and it's going up 112, 150, 100 and whatever percent on day one, and you end up with something like this, right? Well, eventually this is going to start to fall apart, and all these Ubers and Subers and Teslas and Space Dicks, they're all going to suffer. Okay. All right. So, yeah, there's our Airbnb. Yeah. There you go. If you loved it fucking at 166, you're gonna love it at 149, and then when it goes down to 100, you're gonna love it there even more. Anyway, all right. So it's 11:24. Let's talk about going forward some macroeconomics. Okay, and we're gonna keep NDX here. This is gonna start to fall. So perhaps it happens today. I think it happens today. We have time. Okay, so this is gonna give way and start to go. So what I should probably do is to further measure it. All right, so there's two ways I want to measure this. I want to measure it from the bottom. Point of control is 11,900, let's say 12,000. And I want to measure it from the previous high. Okay. And point of control, what the fuck? It's at the same place, isn't it? Give me 1 second. Yeah, it's at the same place. Exactly the same place. All right. So I'll get rid of this one. All right. So from here on, point of control. So we could see how much of a pullback would that be. Oof. Oof. We're already down 0.7. Yeah, we could have an event today. It's 11:25. Figured by 1:30 starts to go. Yeah, we'll see. We'll see. If not next week. But this, again, before I continue, uh, you see this when it starts to build pressure down here. Next move coming. Just give me 1 more second. 1 second. All right. Okay. All right. I'm back. Okay. So now let's talk macro. You know that about 68% of GDP is consumption, right? And then you get that 10% of investment, and uh, then the government is 20 plus percent, and then some import export is minus 3 percent, and so forth. All right, so what's going on now? If you listen to Biden, he said, well, I'm not going to make a decision about China yet. I'm not going to make a decision. Why do you think he said that? I'll tell you why. Because when you end up in a situation like we are now, where we are MMTing everything, we're printing like crazy. We only have a certain amount of options to get the economy back. And one of them is printing. Okay? All right. So we've done that. How's it going? Horrible. Horrible. That's how it's going. It didn't do shit. The economy is starting to roll over going into Christmas with stimulus in place, with extended weekly unemployment, with $600 pandemic unemployment assistance, with $1,200 that was given out to everybody, with uh, buying junk bonds, with giving businesses loans that you're going to forgive, with. And what have we gotten? Nothing. With zero interest rates. And that's the other one, right? Interest rates. So we have interest rates. We can stimulate the economy, spending. We have printing. What's next? What else can we do? Devalue the dollar, right? Make our exports cheaper so people can buy. Okay. So then we have the dollar devaluation. Okay. How's that going? Well, it's good. Remember that the dollar devalues on its own. When the economy is not producing like it should, the dollar falls by itself. All right. So we've lowered interest rates to zero. We've printed about 4 trillion. We've devalued the dollar by 12%, right? Because we want to get that 68. We want to get that 68 at least, if not 70% of consumption. We need to get this back of January of 2020. So we've done all this. What else can we do? What else can the United States do? Protectionism, right? Go out and start setting tariffs and currency wars and whatever, right? So protectionism. That's in place. We've done that already. We're already fighting with the Chinese. What else can we do? Think about it. What else can you do? Remember, when the crisis hit, the global leaders, the finance ministers, everybody and their mom, central banks, they're going to coordinate. They're all going to come together and they're going to be like, okay, first rule number one is let's not let anything fucking crash. That's rule number one. So then they start to cooperate. What happens during kind of the, okay, we stabilize things? Well, everybody goes back to doing what's best for them. Right? That's what everybody does. Go back, you do whatever is best for yourself. You don't agree anymore. In the U.S. case, it's in everybody's best interest that we continue to consume because we're the only importers, major importers in the world. Again, China, exporter. Europe, exporter. Middle East, exporter. South America, Africa, we don't even talk about. Forget about them. Okay? So, what is the U.S. doing? Well, it's importing at historic levels. If you're importing at historic levels, how can you create jobs? If you can't create jobs, how are you going to create wages? Okay? You're going to have that high unemployment. But you're doing everything there is to do already. You lowered interest rates to zero. You printed money. You lowered the dollar. You have protectionism in place against China. And you're still importing more. So you need to figure out how the hell are you going to stop those imports? Not necessarily stop them. I shouldn't say it like that because it's not necessarily that we're importing more. It's just we're exporting less. Okay. So who's our biggest trading partner? Right. You got China. Yeah, we import a lot from China, but our biggest trading partner uh, is this the list? Yeah. Okay. So then you got the European Union. That's the biggest trading partner right here. All right. 283 billion, and then comes China at 129. So it's not even close, right? And then you got Canada at 282. You got Mexico at 243 in terms of exporting. Okay. The imports definitely are more, with China. Same thing with Mexico, but you need to start to export more. And the biggest guys are going to be Europe, Canada, and Mexico. So you need to boost that somehow. Who's not importing as much? China. Okay, China. So we're going to start putting pressure on all those you know continents or whatever nations that you need to pick up the pace of buying our shit. Because we need to create jobs here in America. Uh, so that's going to start to become problematic, right? Because you're going to have to devalue the currency even more. See, the problem with the U.S. is we have really, and not just the U.S., but mostly the U.S., we have really outpriced ourselves in the global market. We're too expensive, and when you're too expensive, you have to bring down those wages to be competitive, or you need to bring those wages up, one of the two. But you cannot bring down the wages if you're going to be the only importer in the world. See, it's a paradox because you need people to consume, so the rest of the world can have jobs because they're all exporters. So, which is it? How do you want to play this? You've done everything there is to do in terms of monetary and fiscal policy. You can keep saying, well, I'm going to print more. Good, go print more. It's not going to make a difference. Well, the economy is rolling over because we're locking down again. Bullshit. That's not why. That's not why. Well, when the pandemic is over, everything's going to go back to normal. No, it's not the way it works. It took us from 2008 until 2000, and I guess 16, 17 is when things really started to improve, right? So it took such a long fucking time for us to recuperate the economy. And the whole entire time, when we did improve, we're like, yeah, we can import because we're so strong. We have so much demand that we need their stuff because we can't produce enough ourselves. We're making satellites and Boeing 777s. We're so cool. Yeah, but now we're not that cool, are we? Nope, not at all. Not very cool at all. So the rest of the world needs us to import, but we also need to lower wages. And you do it through dollar devaluation. And then you got some people running around saying, oh, there's just too many shorts in the dollar and blah, blah, blah. No, there's not shorts in the dollar that's making the dollar go down. It's not. It's the economy is not working as it should. We're printing too much fucking money. Okay? And naturally, the dollar will start to fall. It has to. It's what the government needs to do anyway if it wants to create jobs, right? You got to make yourself competitive relative to where you were before. So it's going to get very ugly. It's going to get messy, is what I'm trying to tell you. Uh, there's a lot of hype, a lot of everything, but if you really understand how macroeconomics works, how the currencies work, then, how many options, how many tools do you have at your disposal? You end up in a situation that's pretty bad. And again, if you don't get to that 68 and above, you're not going to create jobs sustainably. You know, you're not. You're not. All everybody that is measuring the U.S. like, oh, it's a V-shaped recovery, everything is great. Oh, look, America's back, right? That fucking idiot, Logan Mohtashami, that guy's a moron. Oh, America is back. What America is back? 3,000 people a day are dying. 300,000 have died. We got millions of people unemployed, pandemic unemployment insurance. We need another stimulus. We have 12 million, I think, I forgot who JP Morgan, I think, did it. 12 million can't make their rent. Okay. The average household mortgage and rent, back back mortgage and rent is about almost $6,000. Okay. So what America is back? What fantasy world is he talking about? Unemployment, weekly unemployment is starting to rise again. What America is back? What We have deep fundamental structural scarring problems in the economy. Okay? The stock market can behave and be a quote unquote forward looking indicator, but not with these kind of fundamental structural problems. We're going to do more protectionism. Well, if we do protectionism, they're going to do protectionism. Whoever wins in trade wars? Nobody. Whoever wins in currency wars? Nobody. Go back in history. Tell me when that's ever worked for anybody. Any kind of benefit that we get from a weak dollar is short lived. It doesn't last. It doesn't last. Because then the other parties are going to do the opposite. I'm telling you, and I know I sound like a broken record, and I get gay birds coming around. Oh, you sound like Peter Schiff. Go fuck yourself. I sound like Peter Schiff. I'm telling you what I see, how I see it. I wasn't Mr. Peter Schiff back in 2010, but I am now, if you want to call it that. I don't have a problem. You can call me whatever the fuck you want. I'm telling you what the reality of the situation is. You have zero interest rates. You have printing out the ass. You have dollar devaluation. You have protectionism already in place. There's nothing much more you can do. You can just do what? Negative interest rates? We're already at negative interest rates. You're already there. Any money that you're printing is going to the stock market, and that's going to have that law of diminishing returns. You get companies that are going IPO every single day. You have one section of the economy in the real estate market where delinquencies are rising, and then on the other hand, you're telling me that home prices have never been higher, right? It's just everything is contradictory. It's going to be a while. Vaccine. Well, what did we hear yesterday from the vaccine news? Well, it prevents sickness, but it doesn't prevent contagious. You can still spread the disease. Fine. The vaccine is not going to do anything unless we reach herd immunity. So unless we get to that 70, 75%, whatever it is, herd immunity, it's not going to work. It's not going to do anything or have limited effects. How about that? So the only thing you're reducing is the sickness, the severity of the sickness, which is great. Okay, so we're going to stop people from being sick and dying. Great, but only if they take the vaccine. You got Trump bots running around saying, I'm not taking the vaccine. Fuck that, I'm not taking it. You got the FDA saying, well, don't give it to anybody less than 18. Right? There's some kind of allergic reaction, whatever the thing is. But without the kids below the age of 18, how do you get to herd immunity of 70%? Right? So you see, there's a lot of structural problems. And God forbid anybody gets sick or dies or something, you know, that's going to be problematic, not from the standpoint of the vaccine, from the standpoint of trust. And if you don't have that trust, and if people are not taking the vaccine, how we fix the problem? No, not even close. So remember, we need to get above 68% consumption in order to start creating jobs. And we've done everything there isn't to do. We're almost, you know, we're out of bullets. So look for QE to increase. Look for more stimulus that's coming, and we know that. But it's not going to do a whole hell of a lot. It really isn't. All right. So anyway, that's my little spiel for the economic stuff. And again, when you see the dollars falling and people are telling you, oh, everybody's so overweight and the dollar's short. that's that's the dumbest thing in the world, you know. And if you think, you know, the dollar falling is going to fix everything, it won't. It'll only be a short-term boost. That's it. And then the other parties are going to react. Okay. The other parties are going to start to react, and then you lose that edge, and then you have more protectionism, and that never leads to more global trade, right? So look for the U.S. to start going after Europe in terms of trade, right? We want you to pick up your exports. I think who was it Europe yesterday that said, and that's just a sign, by the way, that said that they're going to drop the tariffs against airplanes and something else, right? That's just a sign. So look for a lot more articles where Europe will start to suspend, I think is the way they phrased it, uh, tariffs with the U.S. Let's see how that goes. Let's see how that goes. But you know, we're the greatest economy in the world. We're the baddest. We're the best of the best. That's why we can import and not worry about it. Yeah, okay, that's done. That's out the window. 57% of the U.S. is employed, right? We're starting to see this starting to rise from the lowest we saw. I think was 268, the earnings yield, right? So let's see how this is going to go out. We're still waiting for this to start to fall apart. Hasn't happened yet. So again, you know, for the newbies out there that think, oh, the vaccine is here, we're going back to normal, and just oversimplifying shit, and you've been trained for 10 years to buy the dip, buy the dip, buy the dip, and you've always gotten rewarded, or you felt like you just missed out and you got the end piece of the buy the dip, and you're buying the end piece again today, you're going to find out that the market doesn't only go one way. Okay, and all that bullshit that, well, Buffett says if you buy and hold over the course of time, you're buying a piece of the company and you just want to hold over time. Yeah, that sounds really fucking good when you're reading a textbook or watching a YouTube video and be like, oh my god, I love Warren Buffett, he's so smart, right? Then when reality hits and you open up your computer and you look at your account and it's fucking going down every single fucking day, and you start pulling your hair out, Buffett looks like an idiot then, and all those little memes. So again, look at the message of the market, right? All in wave three, all up against resistance, head and shoulders all over the place, double tops all over the place, right? And at the very least, you're going to get some kind of a correction here soon. Look at the VIX, look at the bonds, look at the dollar. Okay, dollar starting to rise, fear indicator. Bonds are starting to be bought up. Interest rates starting to fall. That's a fear indicator. Um, it's just written all over the charts and the price action. So I'm just getting you ready. That's all. All right. Any questions? Any questions anywhere? All right. Let's look at the market internals. TSA Numbers are starting to fall off again. Um, where is the? I just want to point this out here in a moment. All right, so air travel in Europe bouncing a little bit right here. Little bit of a rise. Little bit of a rise. Okay, going into the Christmas holidays. And that's another thing. They're telling you that in the next 2 months things are going to get really fucking ugly. Really ugly. Skip that. Yeah, look at trade. Look at this. Look at trade. How is the dollar going to be, valued if you're importing your ass off and exporting dollars to the rest of the world? Why would there be more demand? Well, no, everybody's short the dollar. They're stupid. No, they're not stupid. They're not stupid. They're doing what they're supposed to do. World trade is going to collapse when it comes out at the end of 2020. And in another month or so, it's going to look like this. And then world trade will have to start to build back up. And, it'll take some time for world trade to get back to where it is. But again, Americans are very expensive. All right, quickly, one new ETF that's come out, it's called UFO. And if you look at it, it's the war machine, is what it is. It shouldn't be called fucking UFO. It should be called the war machine. Okay. Uh, so this is the holdings. Northrop Grumman, General Dynamics, Boeing, Raytheon. So just something to bring to your attention. Remember that America's war machine always is going to prevail at the end. Okay. Where's the market internal? Oh, there it is. All right. So market internals have been shit for months now, and let me refresh this. So what's leading today? Communications, industrials, and consumer staples. What's lagging? Energy, financials, and technology. Technology, you don't want to be lagging. All right. Consumer discretionary in the middle during Christmas. Let's see how it is 5 days. All right, so the last 5 days, real estate, financials, information technology is lagging. Again, lagging. What's leading? Communications, consumer staples. Okay, so it's a little bit of an improvement there for the last 5 days for consumer staples. Uh, I'm sorry, consumer staples. Okay. Utilities, the top four. How about the last 3 months? Come on. All right. So energy has led in the last 3 months. Financials and industrials. That's not what you want to be leading in the bull market. Lagging real estate, consumer, and consumer discretionary. Information technology in the middle. All right. So remember, it takes a month. I'm sorry, a quarter for the market for hedge funds and big funds to put on a position. And if they're not putting their money in technology, then that's where the market leaders are. That's problematic. Keep an eye on these relationship here. Also, let's take a look at Zoom. Oops. No, that's not what I wanted. Let's put it here. Zoom. Okay, Zoom is starting to fall apart here. Correcting through time, granted, but it is breaking that trend line. And the next one we'll want to put up here is Jets. And Jets starting to break down at the same time. Okay. So there it is. It's doing the opposite. Keep that in mind. A lot of IPOs, a lot of bullishness, a lot of going back to normal. Problematic. Anyway, it's 11:50. Gotta go to lunch. Expect this one to break down today. Perhaps I might come back towards the end of the day if something substantial happens. Otherwise, probably not. I'll just stick with my subscribers. Don't forget to come down, patreon.com/RealMacro. Subscribe. Um, Again, I don't know how much longer I'm going to do this free stuff every day. Um, we'll see. Uh, but for now, the foreseeable future, the next couple of weeks, I should be around. Okay. Otherwise, I'm gonna go back into my little nutshell. All right, guys. Perhaps I'll talk to you later. Otherwise, thank you for coming. I appreciate it. Don't forget to like and subscribe. And again, patreon.com/RealMacro. Talk to you soon. Bye bye.